to give their assurance. And we have Chakri Lokapriya of TCG Advisory is joining us on the show. Chakri, good evening. Thanks a lot for joining us. Now, this SIT on P notes seem to be making, a large section of the market extremely negative, and that's the reason we saw the profit-taking bout getting triggered. What's your take on it? Because you've been an overseas fund manager. That has caused a serious amount of damage in today's market.
Well, here's my take on it. P notes is a well-regulated instrument. It's a well-established instrument. More than 10 to 12% of the total FII inflows into this country. It comes in the form of P notes, and it's come in the form of P notes for the longest time now. Now, over-regulating a well-regulated product which has strict regulations is clearly something which is negative for the market. And I think somewhere the authorities recognize the fact, and I doubt it will really come to an increased burden for investors in terms of regulation.
Chakri, what also soured the mood today was, the meltdown that you saw in China. What's the spillover effect? I mean, every time China sort of sneezes, we seem to catch a cold.
Well, there are a couple of things happening here. One is China has seen an earnings slowdown over the last 1 year, and its public-led capital expenditures have also slowed down. And second, the commodity prices, various commodities, whether it is metals or oil, they've all fallen very sharply over the last 1 year, including the last few weeks. Now, its impact on the Indian market is positive, if anything, simply because India is a big importer of commodities and oil. Now, the positive earnings impact which will be felt for manufacturing companies and including very infra companies, because they're big users of steel and other commodities. You will see the positive impact maybe in a couple of quarters down the road. That's one. And second, I think this is a more cyclical thing, so we will continue to see the impact for a longer period of time.
What about the route that we've seen as far as commodity markets go, Chakri? How do you see that impacting, Indian markets and specifically Indian companies?
If you look at various commodities, whether it's aluminum, tin, copper, steel, including oil, of course, they've all fallen anywhere between 20 to 50% from their recent peaks. Now, coupled with that, you have coming in 2016 and 2017 new factories which are bringing in additional supply of these various metal products at a far more cost-efficient manner. And therefore, there is a cost lid. And we also need to remember that these are extremely long cycle. It takes a long time to build a steel plant. So once it comes on stream and where you have more than adequate supply, then in that case the prices remain subdued for a fairly long period of time. India will, as an economy, will benefit immensely from this, simply because it imports a lot of the stuff. And second, it should be therefore translate into positive for earnings from FY17 and beyond.
Chakri, how have you analyzed the Q1 earnings so far? Because some of the chinks in the armor are getting highlighted as far as the first quarter earning goes, and that is also making markets nervous. What's the outlook here?
I think from our last interaction when we said that we are looking at an FY17 revival, and the current earnings quarter has just reinforced that belief that actually FY16 will turn out to be weaker than what we had forecast. So earnings for FY16 will probably be in the neighborhood of about 10 to 12% earnings growth, but FY17 will be much faster. And I think the market is not looking at FY16 anymore, or rather should start focusing on FY17.
Chakri, just a quick view on one of the sectors which is also dragging markets lower, which is the pharma sector, and especially large cap stocks like Sun Pharma and Lupin have developed their worries and specific issues in the last couple of days. How are you looking at the derating which has started in large cap pharma?
A couple of things. One is Sun Pharma and Lupin are both company specific issues. Lupin, well, you can argue that this earnings miss was because of a US-led slowdown in sales, Yes, but again, new product approvals are always lumpy, and if you look later into the second half, third quarter of this year, Lupin has a number of new product approvals in the pipeline, and including the new proposed acquisition, the company will have 44 first-to-file products. And so I think both the company events does not imply anything negative for the industry. Second, I think the market has been overly concerned about a slowdown in U.S. new product approvals. This is again something which the U.S. drug industry goes through in its own cycles. And Indian pharmaceuticals companies are moving towards more complex generic products, which bodes well for the future of the industry, and we continue to remain overweight.
All right, Chakri, we leave it at that. Always nice to get your word in on things.
Thank you.
Let's move on.